In 2008, the economy collapsed. Millions lost their homes, their savings, everything, but nobody explains why it happened. Until now, I'm going to explain it so simply a 5-year-old could understand, starting with a bike. You're 5 years old. You want a bike, but you don't have money, so you ask your dad for a loan. Can I borrow $100? I'll pay you back, I promise. Your dad says yes. That's a loan. Simple, right? Now, what if your dad didn't trust you pay him back? What if he knew you couldn't, but he gave you the money anyway? That's what banks did in 2008. Now let's scale this up. Instead of one kid wanting a bike, it's millions of people wanting houses. In the early 2000s, everyone wanted to buy a home, and banks, they were handing out loans like candy. You want a house? Here's a loan. Can't afford it? Doesn't matter. Here's a loan anyway. Bad credit? Who cares? Here's a loan. People with no job were getting $500,000 loans. It was insane, but banks kept doing it. Why? Because they had a plan to make these bad loans someone else's problem. And that's where things got really crazy. Here's where banks got clever. They took all these bad loans and bundled them together. Imagine taking 100 rotten apples, putting them in a gold box, and calling it Premium Apple Collection. That's exactly what they did. They called them mortgage-backed securities, slapped AAA ratings on them, the highest safety rating possible, and sold them to investors around the world. Pension funds bought them. Your retirement accounts bought them. Foreign banks bought them. Everyone believed they were safe. They were actually buying garbage wrapped in gold paper. And nobody knew the whole thing was about to explode. For a few years, everything seemed perfect. House prices were going up and up. Banks were making money. Homeowners were happy. Investors were getting rich. The whole system looked like it was working beautifully. But it wasn't. It was all built on a lie. And in 2006, the cracks started to appear. People started missing their mortgage payments. Just a few families at first. Then dozens. Then hundreds. Then thousands. Remember those people who got loans they couldn't afford? The ones with no jobs, no income, no savings? Yeah, they still couldn't afford them. Shocking, right? And when they stopped paying, everything started to unravel. The whole house of cards was about to collapse. Now, remember those mortgage-backed securities? Those bundles of bad loans that banks sold to investors? The ones with AAA ratings that were supposed to be safe? Well, when homeowners stopped paying their mortgages, those securities became worthless. Imagine you bought what you thought was a box of gold bars. You paid millions for it. Then you opened the box and found out it was actually full of rocks. That's what happened to investors. Pension funds lost billions. Retirement accounts lost billions. Insurance companies lost billions. And suddenly, nobody wanted to buy these securities anymore. The market for them completely froze. Banks that owned them, they couldn't sell them. Banks that needed money, they couldn't get it. And one by one, the biggest banks in America started to fail. Bear Stearns collapsed in March 2008. Lehman Brothers collapsed in September. Over 150 banks would fail in total. The entire financial system was on the verge of total meltdown. The panic spread like wildfire. If the biggest, most trusted banks in America could fail overnight, then any bank could fail. People around the world rushed to withdraw their money. Stock markets crashed. The Dow Jones fell 777 points in a single day, the biggest point drop in history. Credit markets completely froze. Companies couldn't get loans to pay their employees. Car sales stopped. Home sales stopped. Construction stopped. Entire industries just froze. What started with some bad mortgages in America had now infected the entire global economy. Iceland's entire banking system collapsed. European banks were failing. Asian markets were crashing. The whole world was in a panic. And everyone was asking the same question. Is my money safe? The answer? Nobody knew. And that uncertainty almost destroyed everything. The U.S. government faced an impossible choice. Let the banks fail and watch the entire economy collapse into a second Great Depression, or bail them out with taxpayer money. In October 2008, Congress voted on the Emergency Economic Stabilization Act, $700 billion, the largest financial bailout in American history. Think about that number for a second. $700 billion. That's over $2,000 for every single person in America, including children. The banks that caused the crisis, they got rescued. The people who lost their homes, most got nothing. The executives who made millions selling bad loans, they kept their money. Some even got bonuses. While 9 million families lost everything, the people responsible walked away rich. And that's the part that still makes people furious today. So what was the final damage? 9 million families lost their homes to foreclosure. Think about that number. 9 million families. That's more people than live in New York City. All lost their homes. 8.7 million people lost their jobs. Unemployment doubled to 10%. $16 trillion in household wealth vanished into thin air. Retirement accounts were cut in half. People would save their entire lives for retirement, saw their savings disappear. It took over a decade for the economy to fully recover. An entire generation graduated college into the worst job market since the Great Depression. The middle class got destroyed, and the wealth gap between rich and poor became the largest it had been in 100 years. All because banks gave out loans they knew people couldn't pay back. All because nobody stopped them. That's the 2008 financial crisis explained. Banks made billions selling loans they knew would fail. When everything collapsed, they got bailed out with your money. The people who caused it, they kept their fortunes. The people who lost everything, they got nothing. And here's the scary part. Many of these same problems still exist today. If you want to understand how money and power actually work, hit subscribe. I break down complex economics into simple explanations. No jargon. No BS. Just truth. New videos every week. Thanks for watching. See you in the next one.